Okay, Chapter 21, Stamp Taxes. First area that we're going to deal with within stamp taxes is stamp duty. Okay, stamp duty, um, as opposed to any of the other taxes. Although stamp duty and stamp duty reserve tax are linked together. In effect, they're chargeable on the same sort of thing. Okay, so the first one is stamp duty, and what's it charged on? Really the transfer of shares and securities. So in other words, the transfer of a set of shares from one person to another person. Now, stamp duty is payable if that transfer is made using a stock transfer form. And historically within the UK, all transfers would have been made prior to the internet being available through the use of a form. So if you wanted to transfer shares to another person, you had to use a stock transfer form. And if you did, then stamp duty would be payable at a rate of 0.5%. I'll draw your attention to page 453 of the text in relation to bearer shares, where a slightly different percentage is used. But I would have thought for the most part within your exam, what you're going to find is an ordinary transfer of ordinary shares, and the rate is going to be 0.5%. Now, the thing to bear in mind is that when you apply the rate to the value of the shares, you round up to the nearest £5. That's quite unusual, really, when you're applying a tax rate as such, but you do round up to the nearest £5. So try and remember that when you apply the percentage. The other thing to bear in mind is that if the value of the shares is less than £1,000, then stamp duty is not charged at all. So watch out for that trick within the exam where a low value, i.e. less than £1,000 worth of shares is being transferred, because regardless of applying the rate, nothing will be payable in stamp duty. In terms of the due date, just 30 days from the date of the transfer. Okay. Now, who pays the stamp duty? It's the purchaser, usually, that pays the stamp duty. So the person receiving the shares is payable or is charged for the 0.5% rate. There are some exemptions, gifts, for example, and also transactions connected with divorce. They're exempt from stamp duty completely. Okay. So, worked example here, we have someone who's really transferring shares in an unquoted company to another person at the value of 72,480. So the question simply requires you to calculate the stamp duty payable. So when you look at this, you certainly know that the exemptions are not going to apply, and indeed the lower value level, it's well above the £1,000 limit. So it looks as if there's going to be some sort of calculation here. Remember that we're rounding up as well, so just watch out for that in the answer. Okay, so we simply apply the percentage to the amount and literally round up to 365 and 362. So fairly straightforward. Okay. In terms of the administration, all of the taxes that you see within this particular chapter are administered by HM stamp taxes. So that's just a particular section of HMRC. The form is required, the return in effect within 30 days with payment, okay? And interest would be chargeable from the 30-day point, as you would imagine, or indeed the 31-day point. If the interest is less than £25, it's waived, so no interest payable. Now, if the individual is late with the form, there are, as you'd expect, a set of penalties. Less than 1 year, the lower of 300, or the amount due greater than 1 year, the higher, indeed, of £300 and the amount due. Okay. Do take a look at the interactive question on 454 in relation to that particular area of penalties and interest. Okay. So, moving on from here, what we're going to be moving towards is something called stamp duty reserve tax, which is very, very similar, but it relates to, in effect, online transactions, or what we would call paperless transactions. Now, what you'll find these days is that most transfers of shares, if you imagine by stockbrokers, are not going to be done using a stock transfer form. They're going to be done online. And that's really where stamp duty reserve tax comes into play. So, what is stamp duty reserve tax? Well, I think we've probably guessed that already. In essence, it's just simply the sort of online or paperless version tax in relation to the transfer of stocks or shares and securities. So really most transactions today, as I've said, would attract this tax as opposed to the ordinary stamp tax or stamp duty. So what you'll find in practice is that stockbrokers, for example, will be submitting returns indeed on a monthly basis that have a series of amounts due in relation to transfers that they've been connected with on behalf of clients. Okay, so the clients will have had stamp duty reserve tax deducted from their accounts, and it will be paid over by stockbrokers. So really, all we're talking about here is this sort of online tax, I guess, for the transfer of shares. So exactly the same thing as stamp duty, but just the online version, no stock transfer form. The rate, 0.5%, really as before, but in this case, no rounding up. So no rounding up to the nearest £5 at all. Okay. No exemptions really at all unless there's no consideration. What would be an example of there being no consideration? Perhaps divorce would be a classic one. So just in this case, just remember that there is no rounding up to the nearest 5. In terms of the administration, again covered by HMRC stamp taxes. As I said, stockbrokers would be sort of required to account on behalf of their clients on a monthly basis. In terms of payment, normally the 7th day following the month in which the agreement was made, but the CREST system is just really an automated system that sort of captures all transactions, and in that case what you'll find is that the transaction will be within 14 days, or the amount of stamp duty reserve tax will be payable within 14 days of the trade. So just bear that in mind in terms of the difference between the administration of payment for stamp duty versus the administration of payment for stamp duty reserve tax, just slightly different. In terms of penalties here, no payment 60 days basically after contract date, so payment would be incurred at the 61-day point. Okay. So moving on from here, in terms of sort of a summary position, really so far we talked about two taxes that relate to the transfer of stocks or securities. One of them being in relation to a stock transfer form, the second being in relation to a paperless transaction, but both of them are relating to the transfer of shares from one person to the other, shares or securities indeed. Okay, so fairly straightforward so far. Now, stamp duty, land tax, a little bit more complicated. And what we're talking about here is really the transfers of land, so perhaps the sale of land, and it is payable by the purchaser. Okay? Do bear in mind that it doesn't necessarily have to be a sale. We could be talking about leases, which we'll come on to in a moment. And in relation to leases, quite an important point that the stamp duty land tax would be payable in respect of any premiums perhaps, and also the net present value of any rents. Okay? So in terms of the rates, we're really splitting between two areas. We're splitting between residential and non-residential. So look out in the question for whether the particular type of property being transferred is residential or non-residential, because we have slightly different rates in respect of both. Okay, and also bear in mind that what we're talking about is the rate being applied to the whole value rather than the excess. In other words, let's just say that it was residential, as you can see here on the left-hand side, and it was somewhere around about 150,000, where the 1% would apply, and it would apply to the whole value rather than the excess over 125,001. Okay, so watch for that, because that changes slightly when we move through this section. Okay, so just in summary then, charged on the transfer of land could be the lease of land, certainly payable by the purchaser, and different rates depending upon whether or not the usage is residential or non-residential. You'll pick up this information, i.e. this information here in relation to the bands within the tables, final point, just remember that we're talking about the full value being applied to the percentage in fact. Okay. So, worked example, we have a house being sold at 375, and we're asked to compute the stamp duty land tax payable. So all that we would do is realize first and foremost that this is a residential transaction because it's Harold's own house. And in addition to that, we just need to pitch the level of 375 into the various bands. So we'd be looking to our Hartman's table to figure out what we would apply, or what percentage we would apply to the transaction. So in this case, because it's between the 250k band and 500k band, it's 3%, so we simply multiply by the value, and that's it. And do bear in mind that's payable by the purchaser. Okay. So moving on to leases, as I mentioned earlier on, we've got two areas within leases because we could have a premium, we could have rental, as we've seen within other studies for property income. We could have two different forms of charge here. So when we apply the percentages, we could have two separate calculations. Okay. Do bear in mind there's just a little trick here where the rental value is more than 1,000 and is non-residential. HMRC have simply decided that the 0% band is ignored, use the 1% band. So I've seen tax examiners use that trick. So we're looking at the net present value of rents. You might say, well, what is the net present value? Essentially, all that is the value. For your purposes, for your exam, you would simply multiply the lease term, it could be 20 years or 25 years, by the annual rents, and then you would have, in effect, the rents. There is a discounting in practice, but that's irrelevant for your exam. So in terms of the net present value, we're just looking at the number of years times the rent. Okay, so let's take a look at lease premiums first. Normally charged at full consideration. In other words, the full value of the lease premium times the relevant percentage. Now, bear in mind that the net present value is different. In other words, what we're looking to do here is to apply the excess. So the relevant percentage times the excess and not the whole value. Remember when we were talking about the first area there, we were talking about the sale of freehold, for example. We're looking at the full value. So in this case, we're talking about the excess value. Okay, so the excess over these levels. So for example, where we had a 1%, we'd be looking at only the excess over 125,000 and not the full value of the rental over the term of the lease. Okay, so let's look at a quick example here. We've got the 25-year lease. We have an annual rental of £9,000. So how would we compute the stamp duty land tax? Well, really what we would do is to say, well, what's the net present value? And as I've said, for your purposes, it's just simply multiplying the length of years by the rental per year. And then we have the value, then we're looking to apply that to the bands within the Hardman's tables and look at the percentage, most likely 1%. Okay. So the answer in terms of the full value of the rents is 225. We're looking to take out 150,000 in the lower band level for non-residential, and then just simply multiply 1% times the excess. It is the excess and not the full value. Okay. So what about exemptions? Again, one or two here: divorce, gifts, and if an exemption is in play, no administration is required, and no form needs to be filled out and submitted to HMRC stamp taxes unit. Okay. So administration, again, by the stamp taxes, 30 days, keeps recurring, doesn't it? That 30-day point needs to be submitted a form with payment, and interest, as you would expect, is from that point, so interest from the 31st day onwards. In terms of lateness, less than 3 months, 100, more than 3 months late, 200. Now, third one here is more than 12 months late, a tax-geared penalty. Now, we talked about that in relation to other administration areas. In terms of tax-geared, what do we mean by that? Well, really what we mean is that the amount of tax due, in other words, the penalty is linked into the amount that is payable. There's no particular percentage given within your text, so um, uh, that's not required. A calculation won't be required. I would suggest that a good question might just be in the area of them giving you a submission that's been late and asking you to simply outline what the penalties are, perhaps less than 3 months or more than 3 months. Okay, it may well be that there are reasonable excuses for the person not submitting the form on time. You know, what is a reasonable excuse? Very, very tight definition of that for HMRC, and I would have thought that a serious illness or death is probably the only thing that's going to be relevant, unless they HMRC have made a mistake themselves, perhaps by sending out information to the wrong address when they had the correct address, and the individuals concerned do not have the bill, or don't have details of a requirement to pay, etc. So pretty unlikely that a reasonable excuse or any excuse would be accepted. It would have to be something very, very serious, as with really all penalties across the UK tax legislation. To get out of them is very, very difficult. Okay, that's really it for this particular screencast. Hope that's helpful. I would draw your attention to lease premiums and that area in particular, because that's probably the most complicated area. So I hope that was helpful, and just about to upload this for you.